But tax increases in the budget may make India less attractive on a post-tax basis, says Samir Arora, founder and fund manager at Helios Capital. He also speaks about STT tax collections and capital gains tax. Listen in to excerpts from that conversation.
You are getting a lot of money on STT, yet STT you are not putting in that same pool, and therefore we keep saying that, oh, the equity guys are getting lower tax relative to the bond guys or the debt guys. But let me say one thing, that if it comes through, then in theory, the biggest beneficiaries will be the banks, relatively. Of course, everything might go badly those days, but relatively, it would mean that you are making it easier for the public to, not easier, but you're making the two a little bit more this thing in terms of tax preference and what is the interest of the government, which it must be then that the asset allocation is getting influenced by tax considerations, although they are not transparently counting STT on the equity side and taking that as an aside and then saying the tax rate is low. Actually, it's not that different, I think.
One more thing, which again, this is, we don't know if it will happen or not, is on the debt side now, everything is taxed at the marginal rate, except arbitrage.
That's a bit too much.
Arbitrage, and that may also get corrected. I don't know. I mean...
Correct. That's possible. But right now, I don't go so deep. I just think big picture that this is wrong to have, remove STT, remove anything which is giving tax and say, no, but excluding that, the tax is low.
So suppose we do get some sort of a tinkering, right? Increase in holding period or increase in the amount, the rate, markets will fall. Will that fall be a buying opportunity, according to you? Or do you think this will really unsettle the markets for a longer period of time?
It will fall, according to me, very simply about the same as the tax hike. Because let's say going in, you have a pre-budget expectation that you should make X% return. And so if you take 5%, it will fall broadly similar to compensate for the current holders. Then the new holders know that this is the new rate and all that, and then they change. So I think lifelong flows will moderate. As I said, it's a big picture thing. It doesn't mean it's bad or you'll have negative returns. But obviously, why should new allocation come in the same way if the expected returns from the market, instead of being 12%, are 11.4% or whatever, cut whatever. So how can it be? I mean, that means these numbers have no meaning, that you can, whether your expected returns are 12 or expected returns are 11, it doesn't matter, because the models work like that, the thinking works like that, and the differences are only this much. It's not that 12% will become 5% return expected for long term. So obviously it matters when these big guys do their allocations, and you can see what happened in 2018, which was after a good rally, there was a tax hike of 10% effectively, because the long term was 0 before that and became 10. Now we can keep saying it is because of COVID, this, that, but if you see the cumulative flows of FIs in India, although they are good, they are not of the same scale as we used to have when we were a much smaller market. And I can tell you direct conversations, of course, these guys being, don't come on TV and tell you directly, but they are most bothered by the tax because there is no set off, because they are tax exempt. For our investors or investors in ETF, there is no set off. They have to pay tax a second time in the US. Because if a guy comes into an ETF for 2 months and goes away, how to link the tax that the ETF paid with that underlying guy? What certificate to give him that this much tax has been deducted on your behalf? That is why the world doesn't take tax from foreign investors, for example. But here we are not saying that there should be a different tax rate for foreign and Indian. You please increase STT a little bit. It'll solve all your problems. You still get the same pool of money. You will also discourage short term. You will also discourage F&O indirectly by increasing that cost. You will get whatever amount you want. Just change the structure of how you collect it. You increase it as much as you want. I don't think any foreigner cares. It is just this, it goes into basically it's gone without having any this thing, because you might book like for example, first quarter is good. So you have accrued a tax. The NAV has become like that. Somebody has come in, somebody has gone out. And then there's a fall in the market. Now there's no tax to be paid. But somebody has redeemed at a low price, high price, all those things are the
All right, with that, we'll slip into a short break. On the other